Okay, guys, hope you're well. I'm gonna kind of go and have a look at the market. Let me just show something, and I'll explain what's going on. We've got a chart here of Bitcoin. Now, most people look for super duper indicators all the time and what's going on, etc. The actual best indicator is this thing here, the price itself. Now, there's certain indicators that can now help you. Now, if you look at that, you say it's going down. It is. But it's also exhausted. How do I know it's exhausted? Well, the Bollinger Bands telling me that. The RSI is telling me that. And I could put multiple other indicators on that would tell me that. But I prefer to look at something like this. Well, there's a high probability it's coming here, but there's a good chance it's moving up. And then just go down a step. And sure enough, 1, 2, 3. Yeah, there's probably an opportunity for a quick bounce here. You can see it coming in. So what I would do at this point is just a pound, put on a buy stop. So it has to come to me. Price, if I go 99095, 99095, just like so. What I can do now is that can slide about. So I'm going to put it to the top of the last candle on the 15 minute. Now you can do this with a rollback. Now a rollback is coming on a 5 minute chart and you count back the last 5 candles. 1, 2, 3, 4, 5. All right. What's that? Well, that's the current candle to see what's going on. These 3 are the last rolling 15 minutes, and this is where it came from. What we're looking for is an optimum point of entry. Well, it's just slightly on the top of these 2 candles here. Why is that? Because they're kind of ranging, if you can see. It's bunched. But the general consensus is pushing up. Now, this can blow your mind a little bit because, yes, it's pushing up, but it's also pushing up in the face of a downward move. So, what do you do at this point? Well, you would step it back to the hour to see where this thing came from, and you now look for the last bounce point. Well, that will be here. So just move that up and just drop that in ever so. So that's the top of the last hourly candle. It's not a bad place to be. Why is that? Because we can see that's where the market's come from. Last time it's done a surge, 1, 2, 3, even here, ran up to the top, stopped on this level. Well, that's my bouncing level, which is here. Now what I've got to do is think, well, what if this thing goes against me? How do I deal with it if it's not good? Well, then I need what's called a box of pain. So how far am I going to allow this market to run? Well, I can see there's a stopping point here. All right, so quite pleased with that. So what else? Run this across. What is that stopping point? Well, that stopping point happens to be the last swing as well. All right. So my stop will be somewhere, or a box of pain, as I call it. Drop that down onto here. Pull that up. Box of pain is going to be down here somewhere. All right. So just put an area on the chart. I don't want the market to run pretty much past that point. Right. So what have I got now? Well, now I've got somewhere where I think this is going to go. Now, the next bounce point is that moving average. So we're going to adjust that onto there. So my target is now here. All right. That's going to sort of give a half decent profit. If I just put that on there, it's about 35 quid because we only put a pound into the market. Now I'm being really careful with this market because I've actually been selling it. If I just drop that on, you'll see I've been doing some sells. That's kind of what we've been doing today. Okay, so just take that off for now while we're watching what's going on. But how do I get to this point? Well, the first thing is you need your key levels in place. You haven't got your key levels, wasting your time. All right. they are the best indicator on the chart. Now that one's going to fox you because most people go, resistance and support, levels, fib lines. Are you mad? Well, yeah, I am. But I'm also paid pretty much every single day because I use them. You see, when you're looking at a Bollinger Band, it ends where the candle is. All right. Well, if that's the case, that's where its information ends. Can't move any further forward. It can only tell you what happened retrospectively in the past. So therefore, it doesn't matter what indicator you're looking for. In the live stream, I was requested if I would use an Itchy Magoo cloud on gold. I don't mind. I'll break a chart. I'll go to gold and I'll put it on, but I'll still read the chart the way I'm reading it right now. And I'll use the Itchy Magoo as a guide. That's what these are in front of you. They're just a guide of what can potentially happen in the future. But it can only tell you what's happened in the past. All right? So bear with me on this one. So if that's the case, I can't rely on a single indicator. If I rely on a single indicator, I've got very limited data. And it's probably why a lot of people fail. Moving average crosses are terrible for this. Certainly on low time frames, too much whipsaw. Because again, it's lagging. By the time it catches up, the move's probably over and it's done. A Bollinger Band can show you the strength. It's probably the better of most of the indicators that you see, because it does have a moving average in it, so you can see a bounce point. It can show you strength, which is what you want. It can show compression. It can show weakening of strength, and it can show strengthening of strength. It's a wonderful tool if you understand the 4 states. Now, there's a big module on that in Where the Scruff, and it's one of the best modules in it, because if you understand them 4 states, you can start to read the market, because the market can be strong on a 5-minute chart, but it can be very weak on a daily chart. So therefore, it helps you with your targeting and also the reading of the market in the first place. All right. So all they are is an echo of the past. So where's the level come into it? Well, the level is the only thing that shoots through into the future. We know where the price has been. And as we go through time, price often reverts back to where it's come from, fulfilling prophecy. And why? Because somebody saw value in them in the past. And if they saw value at that area in the past, they will definitely see value at that area in the future. So your level is actually a good indicator as to where the price is going, as long as you've got direction right. Now, in the scenario we're looking at this moment, the price is collapsing, it's coming down. But look, there are big moves in the opposite direction. We've just had a push down, so therefore there could be a move in the opposite direction. Now, in this scenario, my levels create what's called a trading arena. I don't want the price to move beyond these 2 levels, so I just look for the nearest bounce point, moving average, on a relevant time scale, 15-minute, which is up here, and then run the price into it and be happy. And then all I have to do is keep an eye on what's going on. Well, I can see there's a shift moving up here. I can see this is collapsing in, so there's no strength to the downside anymore. So that's what the 15-minute is telling me. Right? Go to the hourly, see if we can create a narrative here. Same principle. There is no strength here. So that means the move, which is the general direction, has run out of steam, which means it has to reset. If it's going to reset, there's an opportunity to go in the opposite direction. Fine. That's what these are. That's what I'm looking at. It couldn't quite get down here. It had a go and it's failed. Why? Because there's a shift in the opposite direction. So I've got 2 time frames telling me this thing's moving up. Come to 4 hour, principle is exactly the same. We can now see, yes, there's a solid move down, but there's no strength left in it. So what would it do? It'll push back on itself. 1, 2, 3, 4, 5 4-hour candles. That's a hell of a lot of selling without any reprieve. Well, we've just hit the hour. Is that reprieve due? Well, yeah, because we found a key level that it rejected in the past, and it rejected at the point where we're putting the price in right now, and stretched to hell, hasn't got far to go. Take it out to a daily. What have we got? Again, a lack of strength, 3 days selling down, and the only thing that's in its favor is this, but this is a daily chart, so you've got to take that into account. Yes, it can pull back into the candle quite a way and then come back down for a few hours and then eventually get down to here somewhere. Okay. That's the principle of reading a chart. You can take it down into 5 minutes, and then what have you got? Well, lo and behold, you have your trade. And you can follow it down. You can see it's collapsing in. Nice lots of green coming in, nice chunky bodies. It's slowing down, but it's slowing down because it's coming to the moving average. This moving average doesn't hold a lot of weight on a 5-minute chart. And what you do is you kind of just watch for that to go up to extreme and then see if it can get further up by monitoring a 15-minute. That's reading a chart, guys. All time frame trading, and what you're doing is you're looking at the big picture, not just microscoping into a certain element, because the moment you microscope in, you might have a hard time of things. And by the way that the comments come in, a lot of people do have a hard time of things, and it's because they don't do the homework. Now that's a quick snapshot of certain things that I'm looking at. There is a lot more to it. I look at it in baskets. So Bitcoin's very odd because I haven't got a basket to work it against. You know, you can talk about correlations with the dollar and all this sort of stuff, and not really. I think it's a bit like the Wild West is the Bitcoin, but ultimately trade what you see. Now at the moment I'm seeing exhaustion in the market, and I'm wanting that quick bounce up. Now, I'll always enter into a market relatively low key. And what I mean by that is I'll go in small and I'll build up. So I'll buy a bit more here, buy a bit more here, bit here, and then last one probably on this level for a bounce. That way I can manage the trade and essentially get better pricing and reduce the exposure but increase the upside at the same time, working on the chart. Hope that makes sense. Let's play it out.